Welcome to All Stocks Index, a video series that breaks down the financial performance of every publicly traded company. In this video, we look at Alphabet's financial results for fiscal year 2023. Alphabet, formerly Google, was founded on September 4, 1998, headquartered in Mountain View, California. Current CEO Sundar Pichai. Number of employees 182,500. Market cap is $2.06 trillion. Current stock price $168. Alphabet belongs to a communication services sector in the internet content and information industry. Alphabet offers a variety of products and services, including online advertising, search engine technology, cloud computing, computer software, e-commerce, consumer electronics, and artificial intelligence. Let's analyze Alphabet's financial performance for fiscal year 2023 by breaking down the 10K report. Let's begin with the income statement. Sale of products and services produces revenue, and after paying off all expenses, the company is left with net profit. Alphabet's search engine, which includes Google, Gmail, Google Maps, and Google Play, is the company's biggest revenue generator, 57%, followed by Google subscriptions, platforms, and devices segment at 12%, and YouTube ads at 10%. Alphabet's annual revenue has been growing for the last 10 years at an average rate of 18%. In the last year, Alphabet revenue reached a record of $307 billion. Cost of goods or services sold was 43%, a typical cost amount for Google. Reported gross profit was over $174 billion, of which 52% was spent on operating expenses. Specifically, research and development was a whopping $45 billion expense, followed by sales and marketing at $28 billion, and general and administrative were around $16 billion. Alphabet was the world's second largest spender on research and development, after Amazon. In 2023, it spent almost 15% of its revenue on R&D, fairly consistent historically speaking. Operating expenses have been below 30% of revenue the last 3 years, and operating income remained steady as well. Accounting for tax and other net expenses, we get a breakdown of all Alphabet's expenditures. Thus, after subtracting all cost, we are left with a net profit of $73.8 billion. Alphabet's net profit reached an all-time high in 2021, followed by a slump in 2022. However, in 2023, Alphabet recovered, but did not surpass the 2021 high. Profit margin, which is a ratio of net profit to total revenue, was 24%, second highest of the decade, after 2021 when it reached 29.5%. Earnings per share, a ratio of net profit to shares outstanding, was $5.80. It was a record, even surpassing 2021's earnings. Overall, earnings continue to grow. Increasing revenue was the main driver behind the booming earnings. In addition, Alphabet repurchased and retired 528 million shares in 2023. PE is a ratio of company's share price to its earnings. It was 25 at the time of the reporting. Alphabet's PE ratio remains exactly at the 5-year average. Turning our attention to the balance sheet, total assets equal total liabilities plus equity. Alphabet holds a total of $402 billion in assets. Almost $87 billion of current assets are invested in marketable securities, but the largest portion is property and equipment at $134 billion. Alphabet has significantly less liabilities, with accrued expenses being its largest financial obligation. In fact, the company only has $13 billion in long-term debt. Let's examine Alphabet's ability to pay its short-term debt obligations. First, the cash ratio. We take the most liquid assets and divide by current liabilities. In fiscal year 2023, this ratio was around 1.36. It has reduced over the past 8 years to its lowest level, but still financially healthy, being over 1. Similarly, current ratio of 2.1 suggests that Alphabet has enough current assets to cover its current liabilities twice over. Checking the leverage ratio of total debt to total assets, we notice it increased in 2020 but remained consistent since Alphabet does not rely as much on debt financing. Similarly, even though debt started to increase after 2020, shareholders' equity increased even greater, making Alphabet a safe investment with low debt obligations. Return on assets has been around 11 to 12% historically, but since 2021 it increased, suggesting that Alphabet has become more financially efficient. Similarly, return on equity ratio made a huge improvement in fiscal year 2021 and basically doubled from where it was in 2010s. Breaking down the cash flow from operating activities, net earnings attributed to the most of the cash inflow in fiscal year 2023. Furthermore, Alphabet is known for its stock-based compensation given to employees, showing here as $22.5 billion. As for investing, Alphabet purchased $77 billion in marketable securities, but it generated even more, over $86 billion, from the sale of financial instruments. Another large outflow of cash was on the financing side, where Alphabet paid $61.5 billion on repurchase of common stock. So, does Alphabet have plenty of cash? Strictly cash, Alphabet has about $24 billion. If we add investments, that amount goes up to $142 billion. However, Alphabet has some debt, so subtracting it from cash and cash equivalent amount leaves the company with $113 billion. This puts Alphabet in second place for companies with the most cash on hand. Investors and analysts typically look at the company's free cash flows, which is calculated by subtracting capital expenditures from operating cash flows. Alphabet is doing a great job growing its operating income. In fiscal year 2023, Alphabet increased its free cash flow to a record-breaking level of almost $70 billion. Estimating free cash flows into the future and discounting them to present value, we can approximate the company's intrinsic value and derive its current share price. We calculate $171 a share. According to this model, Alphabet is trading at a discount. That's all for now on Alphabet. If you liked this video, please like and subscribe. We plan to provide similar content for all publicly traded companies.